Good evening, savvy savers and curious investors. Welcome to Capital Market Live on Channels Television. I'm Will Ibong, and we are here to unpack the market moves and economic trends in a way that makes sense for all of us. How did your investments fare this week, and what economic shifts should you be watching? Before we zoom in on our local markets and economy, let's take a quick tour around the globe. Here's what's happening in the financial world that could impact your bottom line. We begin in Europe, where markets closed lower on Friday as investors assessed the global IT outage linked to issues at cybersecurity firm CrowdStrike persisted. On Friday, an update from cybersecurity firm CrowdStrike led to a major global IT outage that impacted businesses and crucial services, including healthcare. Microsoft was one of the affected companies, while many flights remained grounded or were severely delayed. As a result, stocks retreated throughout the week, with the Stoxx 600 closing lower on 5 consecutive days. The Pan-European Stoxx 600 index closed 0.77% lower as travel, one of the sectors most affected, tumbled 2.07%. Now, in Asia, the picture was similar across the world, with markets declining on Friday. Japan's Nikkei 225 ended the day 0.16 lower at 40,000 points as inflation in the country held steady. Hong Kong's Hang Seng Index was down 2.03% in its final hour of trade, while mainland China's Shanghai rose 0.17% to close. In the U.S., stocks retreated on Friday as well as Wall Street wrapped up the week defined by rotation out of this year's mega cap winners in favor of smaller names. The S&P 500 dropped 0.71%, closing at 5,505 points. Nasdaq Composite slid 0.81% to end. The Dow Jones Industrial Average fell 0.93%. Back home, the NASD unlisted securities market closed negative. The index declined by 0.61%, taking the market cap to 2.033 trillion naira. Also, turnover for the week fell. Volume tumbled by 97.54% to 5.69 million units traded, while value dropped by 53.28 to 2.55 billion naira. Purple Real Estate took the lead on the gainers chart, while First Trust Mortgage Bank recorded a significant loss for the week, and Dual Fluids emerged as the stock investors traded the most by volume during the week. Meanwhile, sentiments in the domestic equities markets were bullish for most of the week as the Q2 2024 corporate earnings announcements trickled in. Buy interest in Airtel Africa, which was up over 4%, propelled the all-share index to about 0.9% week on week to reach 100,539.40 points, its highest level since April the 15th, and consequently we see the month-to-date and year-to-date returns rising to 0.5% and 34.5% each. However, activity levels are subdued, with total trading volume increasing slightly by 2.2%, while total trading value declined by 50.3% week on week. Sectoral performance were mostly negative as the banking, insurance, consumer goods, and oil and gas indexes recorded losses, while industrial goods was the lone gainer. United Capital, that's UCAP, topped the gainers chart for the week, while Linkage Assurance led the declining stocks. The trio of Jay's Bank, QTix, and FCMB Group topped trades by volume. Still talking about the NGX, the Nigeria Exchange Group says it has made participation in the ongoing recapitalization of banks easy for investors. This is after the launch of its digital platform, which reduces the requirement and transaction time for participating in the primary auctions.
You look at the secondary markets part of our business, it's very, very efficient. It's highly digitized. What we're just trying to do here is to, within the ambits of the regulation that governs us by the SEC, see how much more support we can offer to our ecosystem. I mean, we do have in that primary market space many digital, sort of intermediaries. As a matter of fact, if you go back in 2021, there was an end-to-end digital sort of, capital raising activity then. What we have done now, is to scale that effort. So in this situation now, you would have many of the banks who, for example, are connected to this gateway, which means that for many banks today, if you go at the end of your mobile device, you're trying to transact, you're trying to transfer money normally, you would find an opportunity also to participate and to acquire their shares or their rights. And that is because of APIs that the banks also have consumed. So you can think of this now as scaling that up, giving a lot more multiple access and gateways into the central platform, of which this NGX Invest website we mentioned just now is just another gateway.
And that was the group CEO, Temi Popola of the NGX Exchange Group, the NGX Group, by the way. Now, a lot has happened this week, and to dissect all of this is Professor Uche Waleke, Director, Institute of Capital Market Studies, Nasarawa State University, and President, Capital Market Academics of Nigeria. Good to have you on the program this evening, Prof. Prof, if you can hear me, I said
thanks
earlier...
Thanks so much, Will.
It's great,
Good evening,
Prof.
my pleasure.
Prof, a lot has happened this week, as I said earlier, but let's get your quick take on the NGX Invest app that we just saw there that's been launched for subscription to public offers and rights issues.
Yeah, Will, I think the Bola made the point that it's all about scaling what they have started in 2021. I recall that in 2021 there was the MTN offer was digitalized, and that attracted a lot of attention. The whole idea is to streamline the process of application and the process of even processing, to make it simple, and including allotment. So it has a way of reducing costs on the part of the issuers. It also has a way of increasing speed and the time to market. So it's all geared towards expanding market access. And if what happened in Uganda, for example, last year is anything to go by, Uganda pioneered the e-IPO process in the whole of East Africa when it issued the Airtel Uganda shares, digitally, and that attracted a lot of broad participation, including foreign investors. And only a few months ago, in March this year, the Capital Market Authority of Kenya also launched a similar platform with the same intention. Okay. So the process of doing IPOs, as you know, can be quite cumbersome. So the whole idea is to simplify this process.
Okay. So what do you think the Invest app has the capacity to handle high volume trading, especially during popular IPOs, without having technical glitches and maybe causing unfair advantages for some users?
I think that must have been taken, care of. Usually, when you are implementing this kind of thing, of course, you take into cognizance the likely challenges. Anytime you're doing anything digital, you have to be conscious of the risk also associated with that, whether they are coming from phishing, hacking, cybersecurity, and the rest of them. All these have to be taken into cognizance. And again, a lot of people, especially in Nigeria, may not be that technical savvy to be able to participate, and that's why, and that's where stockbroking firms will come in. I'm pretty sure the stockbroking firms will be in a position to assist investors who want to, be part of any IPOs, that will be made available in the market.
Okay, let's move on to the next matter here. We know that the federal government is seeking to amend the Financial Act, which aims to impose a one-time 50% windfall tax on FX gains recorded by commercial banks in Nigeria for the full year 2023. You're a veteran in the market. How are market players reacting to this new tax policy?
Well, I would say mixed reactions. I belong to a WhatsApp platform. I would say an intellectuals platform where a number of arguments have come up. Of course, there are arguments for and against. Those who are opposed to the windfall tax, some say it's levy. So those who are opposed to that, of course, say that is retroactive. And because it is retroactive, companies have already filed their returns for 2024, paid tax 6 in respect of profits made in 2023. And so to that extent, you create some sort of uncertainty in the, in the system because they have paid tax and you're asking them to also pay a tax. And that uncertainty to a large extent, could discourage, investors, especially in the banking industry, particularly now that the central bank is talking about, recapitalization. And we're beginning to also see that you find that even this week, you saw what happened. The banking stocks, tanked, even when the market on the average was up. And if you look at year-to-date return today, for the entire market, 34.5%. But the banking sector, again, as a result of uncertainty surrounding the sector now, is still in negative territory at about minus 6%. All right, so that is the argument for those who oppose. But those who support the moves say is one way of also redistributing, if you like, wealth. The banking sector has been one sector that has appeared to benefit from an economy that doesn't seem to be doing well. If you look at GDP growth rates, the banking sector, the first quarter 2024 by National Bureau of Statistics, grew at 32%, while manufacturing and agriculture is doing less than 3%. So it's also one way to take from that sector and help support the other sectors. All right. So, but what is my take? My take is more of a middle of the road approach. I would regard that as an unusual in the sense that it's a one-off thing that applies to banks' exceptional, profits. Exceptional in the sense that yes, it is in the ordinary course of their business, to do foreign, FX transactions. But that one is unusual. It's exceptional. So it's unusual to that extent. And that's why the tax is one-off. The 50% is one-off. And why do I say it's usual? It's usual because this is not the first, it's not as if this is a peculiar case, with Nigeria. There are jurisdictions where this has also, happened. When you have the time, because time will not permit me to go into them in detail, you look at the windfall tax, the UK windfall tax of 1997. Okay, under the Tony Blair government then, that was applied to privatized companies at the time, because it was thought that perceived a lot, but that privatized companies were highly undervalued, and to that extent, taxpayers were cheated. So the government of Tony Blair applied the windfall tax, and in the process raked in about 5 billion euro. Now you also look up the Spanish windfall tax, okay, of 2021. The U.S. windfall tax of 1980 that applied to oil companies as a result of the windfall they made during the oil boom. That of the Spanish was to electricity companies, and recently to the Parliamentary Budget Office of South Africa last year talked about they called their own abundant profit tax. Okay, again on sectors that benefited much from the commodities boom. So it is not as if it's unusual. That's why I said it's an usual. Okay, but the point too has to be made, and that is the fact that going forward is just past second reading. Before the third reading, there is need for engagement with the relevant stakeholders, particularly the Bank Directors Association of Nigeria, who represent the shareholders, to find means of also cushioning the impact on banks. Okay, for example, that of the UK that I cited allowed companies to pay over a 2-year period, okay? And what is more important, what is the proceeds were applied to particular projects. It was applied to a project that the UK called the New Deal at the time that was meant to, encourage, meant to reduce unemployment. So it should also be very clear what the proceeds are going to be used for. Yes, we understand 6.2 trillion, the additional money the government is looking for, 3 trillion for recurring, 3.2 for capital. But again, it has to be specified what the money and how much is even being expected and what is going to be used for. So I think that is important. Another thing I also want to suggest here is, for the banks, we know they are carrying too much burden now by way of very high cash reserve requirement of 45%. So as a way to cushion the impact, MPC will soon meet. Maybe MPC may consider also reducing the cash reserve requirement, for banks in order to compensate them for what this one they are going to be expected to pay, because some already looking at it as double taxation. Okay. They've paid 30%, asking them to pay 50%. I think it was KPMG that was asking that, is it the extra 20 they're going to pay now on the realized forex gain, or, additional 50%. So it's important for the government to engage the relevant stakeholders, to find ways around this to cushion the impact, especially now that banks are expected to recapitalize, have new capital base. Of
course, Bros. One has to, these are the issues the stakeholders want clarity on, so they don't have to pay tax twice. We're looking at double taxation here, and we don't want anyone to feel left out. Hold your thoughts, Prof. We'll take a quick break right now, and when we come back, Capital Market continues. Welcome back. If you're just joining us, we're watching Capital Market Live on Channels Television. We're discussing the issues that have been trailing the economic financial space this week. And one of it is the dormant account that the Central Bank of Nigeria has directed banks to transfer all balances and assets to the Apex Bank. We still have Professor Owaleke at our Abuja studio. Prof, looking at this, we're also seeing this news from the Central Bank, which came out yesterday, possibly in the evening, that the Central Bank is directing banks to transfer all dormant accounts, unclaimed balances, and other assets to their custody. It looks like the administration is really on a big revenue drive here, looking at the frenzy they are in trying to recoup monies. But this is another hit on the banking sector. Is this based on global best practices, and how much impact will it have on the bank's balance sheet if this happens, since it's going to take immediate effect?
I will. Before I talk about, I answer the question as to whether it has, we can cite some, jurisdictions where this is in place. Let me even say that, yes, it's not surprising that the government is looking for money frantically. If you look at our public debt stock today, 121 trillion naira, and that's even before adding the if you recall, the 7.3 trillion Ways and Means that National Assembly approved in December for securitization. All right, they have securitized 22.7 trillion, which is reflected in the 121, but yet to securitize the 7.3 trillion. So by the time you do that, plus the monthly interest that that's accrued, you're going to get around 130 trillion. And imagine if government were again to borrow the 6.2 trillion they want to use to the additional one they're looking for. So you now have about 136 trillion. So when you see these efforts, one should also try to understand them in that context. But again, the point I made earlier, which I also want to repeat with respect to the unclaimed balances, is that whatever money we are recovering must be ring-fenced, must be tied to specific projects, because this money eventually, the central bank says they intend to invest them in, treasury bills. Of course, that means lending them to the government. So it's important that you ring-fence them so that you can point to what they are being used for. Okay, now back to the question you asked. Yes, whether developed or developing economies, you find regulations around unclaimed balances, or around unclaimed assets, around dormant accounts. The UK has very robust regulations on that. The one of I think 1997, 2000, yes, thereabout. And then in Japan, in the US, in Ireland, Switzerland, you have all these laws. In Africa, yes, you can check Kenya, you can check Liberia, for regulations and laws around unclaimed balances. And they all follow the principle, what is known as the principle of escheatment. Principle of escheatment is also about, taking these funds and using them for the public good, okay, transferring them to the state such that they can, or an organization that uses them for the public good. So it's obtainable in other jurisdictions. So what has happened in our own case is more or less an operationalization of Section 772 of the BOFIA of 2020. I recall that the Finance Act of even 2020, Section 777, also had mentioned it, talked about setting up an unclaimed trust fund. So this time around, Central Bank is putting clarity and saying that they intend to set up a management committee that will now oversee the management of the unclaimed balances, trust fund. And the one good thing about what has happened now in this circular is that Central Bank has increased the dormancy period. Okay, the Finance Act of 2020 had a dormancy period of six years. Once it is up to 6 years, they can sweep them to the Central Bank. But now the dormancy period has been increased to 10 years, which, if you like, is more like global average, because in Canada it's 10 years. But in some other countries, like in France, dormancy period is 30 years. Okay, in Spain, dormancy period is 26 years. But there are also other countries where you have less dormancy periods. Like in the US, for example, some states have between 3 to 5 years. So what you have as 10 years is more like, global standard, all right? And in addition, it also specifies the procedure for reclaiming those unclaimed assets. The whole objective, just as we have in that circular, is to identify the dormant accounts with a view to reuniting these accounts to with their true owners.
Okay, Prof, you're talking about
in
reuniting.
addition to also, of
Prof,
course,
can you hear me?
Holding them in trust for those people.
Okay. Prof, you're talking about reuniting these accounts with the true owners. A lot of people, they're out of the country, their accounts have been dormant for years, a lot of them are dead. Some people are, they've lost their bank details. So a lot of reasons why accounts have been dormant for a long time. And sometimes it's the bottlenecks in the system that even doesn't allow people to be able to access some of their accounts. The measures, maybe the procedures to get the accounts, in place, or to get the necessary information to access the accounts. So now that the account is being moved to the CBN's custody, how are we assured of the fact that when people now want to access, these rightful owners do want to access their account, want to reclaim their monies, how are we sure that they'll be able to get their money in one piece?
Yes, they'll be able to get their money in one piece. I think it is safer, in my view, for these funds to be with the central bank, than with the commercial banks, because from the guidelines, the central bank is saying that every effort must be made, to identify these, beneficial owners of the banks. Okay, that's part of what the financial institutions are supposed to be doing. Okay, I just finished. I think that was last year anyway. I supervised a PhD thesis on this particular topic. Okay, the impact of unclaimed assets on the financial performance of banks, and in it, the author, clearly found that there was no database of unclaimed assets in Nigeria today, and that a lot of these things are even under declared, by the banks. So what is happening now, in my view, is a step in the right direction. It will also help to ensure that those unclaimed assets are not only not well utilized, for the benefit of all, but at the moment the owners surface, with the evidence that they are rightful owners, of course, they not only get what they have deposited, but also interest, at a rate that the central bank, will determine from time to time. So I think it's a very good arrangement that that the central bank has put in place. Okay.
I know we'd have time to discuss this some other time, maybe in detail, and for people to really understand the full.
I also don't think it's going to affect the liquidity of banks, because that work.
So we just want to I know there's not a lot of time left. We just want to quickly look at the central bank still talking about the central bank. They're set to meet on Monday and Tuesday next week to discuss interest rates. We know that inflation right now is at 34.19%. Food inflation, 40.87%. Prof, what do you see the CBN MPC deciding on Tuesday?
Well, on Tuesday, if we go by the body language of the CBN the governor, they are also likely to continue with the tightening stance. The MPC is likely to further hike the MPR. Maybe, you know, they did 400 in February, did 200 in March, 600, and did another 150 the last time. 750 so far. So they're likely, they may do 100 or at least a minimum of 50, okay, at least to give to sustain the tempo. Since even the month-on-month inflation that we saw, you know, declining from January up till May, in June, you know, resumed northwards, you know, started going up again. So on the base of that, and again, the pressure on the
Prof, can you hear me, Prof? I think we've lost Professor Waleke there. Oh, we've lost the signal there for Prof. He can't hear me. So we were just talking about the expectations for the CBN MPC meeting on Tuesday, especially now that the federal government and the Labour have reached a 70,000 naira consensus on minimum wage to be reviewed every 2 years. And this is definitely going to be adding more money into the system. And we're looking at curbing inflation. The CBN has been adamant on using the orthodox method of hiking rates. But Nigeria, they say, has a unique situation, and one must find a unique way to solve the problems that are unique to us in Nigeria. And I'm wondering if there are unorthodox methods, not the usual methods that the CBN can apply to solve this problem, seeing that the methods they're using appear not to be working. Okay, so we're just going to be pondering on that with those happenings. And that was Professor Waleke, Director of Institute of Capital Market Studies, Nasarawa State University, joining us from our Abuja studio to break down the issues that are pending. But we'll definitely have more time to talk about this. But that wraps up this edition of Capital Markets. Remember, whether the markets are bullish or bearish, knowledge is your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can catch this again on our YouTube channel. I'm Will Ibong. Thanks for watching, and see you next week.